Hi, welcome back to the channel. This episode, I started editing. I actually make a video on last Thursday, the morning that Russia invaded Ukraine before market open. So I've had some recordings that I've done, but one way or the other, I couldn't finish editing it before the end of the day. So what I've now done is I've now made this video to be before and after. Before the trading on Thursday and Friday, and after, you would see the difference, what we were expecting to happen. We were at the tip of going into the bear market on Thursday before market open, and fortunately, or whichever way you want to put it, the market opened and it closed back in correction territory in green, positively. And the following day there was a confirmation again. So we are hoping that we are on a trade for bullish move, but it doesn't say that we are out of correction. What you see in this video is the S&P 500, Dow Jones, and Nasdaq, and also some FANG stocks, which I later did on after. You won't see that in before. And also we have a look at 10 years treasury yields, 2 years treasury yields, and also the VIX. Also the CPI that rose to 7.5% as inflation consumer price index. There was a lot of talk whether we're going into the recession, whether we're still going to go into recession, but those barometers, the 10 years treasury yields, 2 years treasury yields, the VIX, and also the market itself. So we're still within the correction territory. However, it looks like we are back on a bullish trend, bullish movement. But the market is sensitive. We don't know what Russia and Ukraine is going to do tomorrow. Also, the sanction here and therefore on Russia might react differently, but the market is sensitive. So what you see is before and after. At the S&P 500 on a weekly chart. The S&P 500 on a weekly chart is trading below the 50-day moving average on a weekly chart, and it is actually testing the January low. Let me draw this support line for you to see it. Then we will go on a daily chart. But as you can see, it's testing this low here. It will be very obvious on a daily chart. Now let's go on a daily chart, then you will see it better. Daily chart is loading. Perfect. Now you can see it. It's already below 200-day moving average. It's testing this low. This is where we are now, but it's testing this low. Can you remember this low in January 2022? 24th of January, that was the lowest. Now it's testing this low. Let me draw a support line here so you guys can see it. It's testing this current low. You can see it. Let's hope this low doesn't break down, because when that happens, we are dipping into the bearish market. But you can see, I don't know what is going to stop this, because the momentum is there. This is an anchor candle going down. So that we will not go into bearish market, I doubt it, with the way things are. And you know what? Once that happens, bearish market, inflation is about 7.5%. We're looking at recession. In a way, I'm not saying automatic, but there are other barometers. But you need to look at this very well. This is very key for S&P 500. Let's have a look at Nasdaq. Let's have a look at Nasdaq. Guys, on a Nasdaq is already below 200-day moving average, far deep into beyond correction. It's also testing this low. Guys, look at it. It's significant. Check it. In fact, it's testing this very low. And that low, I'll give you the date of the low now. this low that is testing is actually January 20th. So it's testing this low as well. What you can also see here is like a double top here, yeah, going down. The momentum is on a bearish side. These are anchor candles, and this is a continuation candle, So it's definitely telling you that it's going further down. So we are deep in pressure on Nasdaq. Let's have a look at what it has dropped from the recent high. From the recent high, that was is it November? Let's have a look. I think from the recent high, Nasdaq has actually dropped about it, almost almost about 18%. Yeah, 18 point something percent from the recent high. But from the um, from this beginning of the year, January 2022, it has actually dropped about 17%. We're deep in the correction. I just don't want to call this a bearish market for Nasdaq. Nasdaq is further down than the S&P 500. Let's have a look at Dow Jones. The Dow Jones. The Dow Jones. You can see the Dow Jones is also, guys, they're all the same. It's also testing the January low. Can you see it? Can you see it, guys? You see that? They're doing the same. We just might be already in the bear market, the bearish market. Look, the analysts and all that says we're still in correction territory. Fine. But with this, I don't see what is going to upturn this. The market is going to open in about 30 minutes time. As you can see, let's have a look at this on a weekly chart. This is a daily chart. On a weekly chart, let's let's see the Dow on a weekly chart. See, it's the same. It's the same. Testing the low there, testing the low, and it is below the 50-day moving average on a weekly chart for Dow Jones. For Dow Jones, below that. Um, for S&P 500 on a weekly chart is below 50-day moving average, sitting on a support. For Nasdaq, For Nasdaq, on a weekly chart, Nasdaq is coming up for a weekly chart, also sitting on the support level below 50-day moving average. I don't know what is going to upcome this, but guys, we are we just might be full in bearish market with this Ukraine and Russia conflict. It doesn't make things any better at all. I would Let's have a look at I think is it 10 years youth curve. Let's have a look at this. Let's have a look at the VIX. The VIX is 31. Can you imagine? The VIX is 31. As you can see, the VIX closes at 31 yesterday. This is very significant. This is as high. Whenever the VIX is up, yeah, the I mean, VIX measures the volatility in the market, the fear gauge in the market. It tells you that look, the market is very volatile and this is very high. For the VIX to be in 81, you can see that. Yeah. Look, I I don't want to say we're heading towards recession, but it looks like we just might be heading there with interest rate of 7.5% and the interest. I mean, for inflation of 7.5%, interest will be hike as many as 7 or 8 this year with the conflict of Russia and Ukraine. It's not the best of time. It's a precarious time in our history. It's a precarious time in our history of the market and volatility. So guys, we're looking at Dow Jones on a daily chart. We need to pay attention to these candles, these two price action here. This candle tells us this is a bullish reversal that happens on Thursday, and this is the confirmation on Friday. This is like an anchor candle. It's bigger than this very one and bigger than the last bearish candle. So it's here on support has come to resistance. This is a confirmation that we are now, not that we are out of correction, but we have seen a bullish reversal. We can now be going on the bullish side of direction movement, not bearish again. It doesn't say we are out of correction yet because we are still trading below 200-day moving average on a daily. Let me just quickly draw this support line because on the first video you saw, there was a line there. See, that was exactly where I drew the line on that video too. So yeah, so you should have it there. And there's also a visible support here that has come to resistance here. The visible one has come to resistance. Let's have a look at it on a weekly chart for Dow Jones. You see, on a weekly chart, it's even very obvious. This is an hammer. See, this looks like an hammer. You know, hammer that you use to hammer things. The interpretation is that this is a bullish reversal. On a weekly chart, you have 5 candles, 5 days a week to make it one. So here is the confirmation on a weekly chart. Now let's have a look at Nasdaq. Let's see what the Nasdaq is telling us. You see, the Nasdaq too on a weekly chart, there's an hammer here. See, this hammer is the bullish reversal. If we go on the daily chart now, let me draw the support line here. This support that's come to resistance was actually very visible. Okay, so let's go on a daily chart for Nasdaq so you can see. You see, in fact, I already did this the last time, so it's still there. You see, this was before this green candle, before the green candle. This, in fact, this is a strong uh, bullish reversal candle. You can call it an engulfing candle, bullish engulfing. This is the further confirmation on Friday. You see, now the same resistance you saw uh, on um, on Dow Jones is similar here too. Let's have a look at S&P 500 and see what it's telling us too. It is significant. The same thing. See, these indices are doing actually the same thing. So if you check the first part of this video that you watch, then with the second one, you will see the difference. The difference is the green candle, the two green, uh, these two green candle are the difference. So this is why we're saying that we're seeing a bullish reversal, but we are still trading below 200-day moving average, meaning that we're not out of correction territory. But let's see it on a weekly chart. You see, in fact, I already do this on a weekly chart. See, let me remove this so you can see the armor clearly. The armor is there. See, it's the reversal. But here, what this trend does is that we are still on a bull trend. This was just a reversal. A correction. See, the next 5, 10 years down the line, when you look at this candle, he will not make any meaning. He won't look any significant because we are here now at present. That is why he looks like that. See, this correction looks like it's even gone deeper than uh, what we had in 2020, but it's not. 2020 was deeper than it, but because we're looking at it now, it looks bigger to us. Let's let's have a look at the monthly chart and see if we can get any. See, on the monthly chart is also an hammer, but here it still shows uh, bearish candle because 4 weeks is 1 month. So each candle you see here is the work of 20 working days, which is 4 weeks. Let's have a look at, let's go back to daily chart. As you can see, we're still trading below 200-day moving average. A lot of stock actually did, have a similar similar bullish reversal. Let's have a look at Microsoft. You see, Microsoft has a similar information, price action. This this was initial resistance that comes to, it was initial support that comes to resistance. Now look at it. Look at the low that was tested. Yeah, this was the one that was in January, and it was tested on Thursday. You see, the hammer is there, so it tells you that we have seen a reversal on Microsoft too. I think let's have a, you see, looks like an hammer. This chart is very similar to the S&P 500 and the Dow Jones, even on a weekly chart. Let's have a look at Adobe. Adobe is one of those stocks that has lost about 30% or 40% of its market price. Let's have a look at it. I think yes. See, on a weekly chart, it looks like an hammer here. This is the same candle, a reversal, but we are now above 200-day moving average. We're trading below 50-day moving average. Let's have a look at that's on a weekly chart. So let's have a look on a daily chart for Adobe. I have Adobe in my portfolio. Let's have a look at it on. You see, very visible. Look at the bullish reversal. You see, this is the confirmation sitting on a resistance here. Resistance is here. You can see, but for Adobe, Adobe is actually trending down and is still very obvious that is trending down. Let me just do this. See, for Adobe, so you need to be careful, when buying the dip. Make sure that you have seen the reversal and the reversal has been confirmed before going on the dip. I mean, before buying, dollar, even if you want to do dollar cost averaging, we're still not out of correction. Let's have a look at metal. Metal. Wow. Wow. You see, metal, we have the same handle on metal here. It's a bullish reversal, and this is the confirmation on Friday. But you see, I actually bought the dip on metal. I initially bought it around 230, and when it went below 200, I think about 198, I also added some, on Thursday or so. You see, I'm looking forward to when metal will cover this gap, because it actually gap down. So I know that this gap will, one way or the other, it will be covered. I don't know when it's going to happen, but be careful, guys. Do not just buy stock because you watch a YouTube channel, as I often say. A lot of stocks actually did a similar thing. Let's have a look at Netflix. Netflix has a similar thing. Netflix has a similar thing as well. See, this is a bullish reversal. In fact, this one is an engulfing candle. It engulfed this bearish candle, and this is a confirmation of it. You see that? Let's have a look at on a weekly chart. Wow, it's an hammer. Yeah. So this is what we believe, for price action. We have seen the hammer, it has confirmed the bullish reversal. The market makers knows what they are doing. The market is very sensitive. Russia and Ukraine is still there. Inflation is still there. Anything can happen. But for price action, this is what we have seen. And we believe that we have seen the reversal. We should be on a bullish direction. So this is Palo Alto. I actually want to add this stock to my uh, portfolio, but for some reason I actually missed the dip. Like I'm the stage I wanted to get the price. Sometimes you don't, as a value investor, you don't just buy value at too expensive. Not, don't buy gold at all costs, because if the price is not right, wait for it. See, in fact, it's an engulfing here, engulfing candle, but there's a resistance here. I'm going to have to wait for it again. Maybe it will come below 400 and I can get it again. I don't know, but then it is just my own wish. On a daily chart, let's have a look at it. On a daily chart, my network is a bit. Wow. This bull movement is actually confirmed here. You see, this is an engulfing and followed by another big anchor candle. Guys, yeah, this is what the kind of transaction you like for your stocks. Anyway, guys, you have seen before and after. Yeah, before uh, um, market open when Russia invaded Ukraine. So, guys, pay attention to the VIX. You see, as at Thursday, look at the VIX actually opened around 37 here. And by the end of the day, it came down to about 30. In fact, it came down to about 29 and it moved back again to 30. And as I said in my previous videos that you may have seen, VIX is actually the gauge of fear, in in um, in the market. The more volatile the VIX is, or let me put it this way: when the VIX is high, uh, market is usually down. Market is trending down, bearish most of the time. Not in all cases, but whenever VIX is high, it shows that people are afraid. People are fear. It's the fear in the market, yeah, and the price of some analysts will tell you it's better to buy when the VIX is high, and this is what they mean. You see, in 37, that was the day when prices were deep down, falling into deep correction, about going to the bear market. That was even Thursday. And on Friday, look at where the VIX stopped. Actually, the VIX, between 18, 17, and 20, here is usually okay for, the market is relatively calm, stable, and all that. But once you start having the VIX going to 25, above 20, 25, and all that, if you check at March 2020, let me go on a weekly chart so we can easily see March 2020 for the VIX. March 2020, it was, yes, 2020, the VIX was as high as 84. 84. You see, the higher the VIX, the lower the price of equity will be. The price will fall. Now look at it. Let's go back to the chart on the VIX. This is significant because when the Friday of the confirmation of the bullish reversal, the VIX started around 31 and 32 and it dropped down to 27. That was the green candles you see, the bullish reversal confirmation. VIX is higher, above 20-day moving average, 50-day moving average, and all that. VIX is a special barometer that you need to put a eye on, as an investor, especially in a volatile season. You have the Russia, you have inflation, you have Fed, and all these things. Let's have a look um, at the inflation gauge in the market. Um, the rate of inflation, should be about 7. Okay, okay. Let's have a look. This is 10 years treasury views. Sorry, 2 years treasury views. We will go on to 10 years. This is 10 years treasury views. 10 years is at 1.92, is as high as 1.92. You would think this should be okay. I mean, treasury yields don't go too, too far like that. But the significant thing is that when you have 2 years going as high as like 1.5, this is 1.4, this is for 2 years, meaning that people are people are not or unsure of the future. People only want to tie their money down or their asset down for a short period.
they're not optimistic about the future long time. So meaning that people don't want to put the money so in a long time. So the interest rate for a long time is not too far from the out of 2 years. Why would I lock down my money for 10 years for 1.9 if I can lock it down for 1.5? You see, that's just the meaning, for inflation, yeah, for the treasury yield. Let's have a look at this for inflation gauge. US inflation. US inflation is actually January, it rose to almost is it 7.5, as you can see here is 7.5. It went as high as 7.5, as you can see, 7.5. And this is for all items or bond items in the US city, the average price, meaning that the consumer, the CPI, the food stuff, a lot of things you buy in the supermarket, the prices are high. Look at it. That's the inflation. When you have this kind of high inflation, you are tilting towards recession. And when people don't have confidence to put their money in a long time, when a short time interest rate is almost equal to long time, it just tells you that there's a sign of people are not confident of the future, or they're not optimistic about the future, which tend to lead to recession. I don't. I'm not sure I have the inverted curve here. Let's have a look if I can bring that out quickly so you can see. Okay, maybe I'll do that on another video, but yeah, this is what you get. For the VIX, the issue the VIX is whenever you have VIX going as high as this, like you saw in March 2020, the March 2020 was a recession, but it was just a pandemic induced recession. So as you can see, so and now even though as of now the Russia and Ukraine war has been priced into the equity already. We have seen the wars. I mean, the invasion has happened. Whether things will get worse, the market is very sensitive. All eyes on the Fed meeting in March now to know, the hiking of the interest rate.
We have seen the before and after. These are the things that happen in the market. What you are anticipating and what happened sometimes is different. No one knows anything for sure. No one knows the market for sure. The market makers knows what they are doing. What we are expecting now is the outcome of the meeting that will be in March, the Fed meeting. We hope the Ukraine and Russia will subside, but hey, it's a war, so anything can happen. Thank you for following up on this channel. Thank you for watching our video. Please like and subscribe if you haven't. Also, tell your friends to subscribe. We will continue to produce content that will support your investment journey. Thank you. Call again.